Hey, everybody, welcome to This Week in the Markets. Hope everyone is doing great. Good to see everyone. Put some lighting here. I look awful orange or red or something. Okay, great to see everyone. Hope everyone's doing well. Hope you've enjoyed the weekend. Taking a little bit of time away from the screen, from the charts. Awesome. And we're going to get right back to it, right? So I like to start my preparation for the week on a Sunday. Sometimes I might do a little bit of work on a Saturday morning. I call it my cave time here in the back cave. But Sunday is where we get that reopen of the futures contracts, the futures market at 6 p.m. Eastern. So basically 2 minutes ago. And you know what? Let me get the clock on the screen here. So basically 2 minutes ago. And we can see what the early impression of, well, actually, the first thing we'll look at is the follow through. We'll circle back to this calendar in a moment. The first thing that I'm going to look at is the follow through on, here we go. Oh, I know what just happened. My nightlight that, how many of you are using that shift? I'm going to totally go off on a tangent here. I was wondering what happened to the picture because everything got very yellow on my screen, very orangey, ambery, I guess. And I forgot that I have my, what do they call that? The night shift. Some of you might be using flux. Night shift just went off and turned everything amber color. So, including my image of myself. So, if you're not using night shift, I mean, ideally time it around sunrise and sunset. Mine's still on a manual timer, but make sure that you're reducing that blue light color as the sun's setting, but in the morning you want it, right? So what I'll usually do is I'll have it set to maybe 4 or 5 a.m. when I might be coming into the office here, and I want that blue light on, right? I want that to wake me up. But in the evenings, yeah, I'm well lit. I'm well lit on this end. Yeah, I can hardly tell. All right. Oh my gosh, that's pretty funny. All right, yeah, the bot's telling me I'm well lit. Anyways, if you're not using that night shift as part of your Microsoft Windows display options, please do. Please do. Anyway, I'll have to remember to turn it off for next week. Okay, so back to the charts here. So what are we doing on Sunday? Well, Sunday's conversation, and let's go to the S&P here. Sunday's conversation is going to go back to basically Friday's close. What was the general gist of the market movement the last, say, 2 or 3 hours of the Friday session? If overall the afternoon session was strong, if overall going into 4 p.m. we saw strength, and I wouldn't say that's exactly what we saw. We saw a good bit of strength between about 1:30 and 3, and then from 3 to 4 we had a little bit of weakness or retraced much of that move. Not much. Took profit on some of that move. And then take a peek. Boom. Here we are on Sunday, pretty much echoing the sentiment a little bit of what we saw on Friday. Another place I want to look is we saw a pretty healthy bond recovery the last part of the day when bonds were weak. And take a look here. 6 p.m. bond yields are up as we see that down move on ZB. This doesn't mean that this is what we're going to see even tomorrow morning at 7 or 9:30, but it's interesting to look at the follow through from Friday. All right, so that's what I see there. Another place we want to look is the euro. The 6E, the euro, what we saw from the European Central Bank was Lagarde was pretty adamant that they are still quite hawkish. They are still very much in their battle with inflation. And I would take her words and even her alluding to some members of the European Central Bank wanted to hike by 2/4 points, 50 basis points, right? They wanted a 50 or a half point hike. That's hawkish. Hawkish, favoring higher rates is generally bullish to the underlying currency of the country, in this case, the European Union, and boom, euro should be up. That should push the US dollar down, right? So this are some of the things that we might see coming over from last week. All right, this coming week, what are we dealing with? Got a bank holiday in the UK, which means that London Fix is not going to be tomorrow. And then we have, by the way, I did not mean to buy the can. They usually come in glass bottles, which I prefer. But this is Richard's Rainwater. It's pretty darn good. It's pretty darn good. I know. I'm drinking rain in a can. It's 2023. This is where we're at. So we won't have that London Fix on tomorrow, which makes it 11 to 12 o'clock, maybe a little bit more interesting. We'll keep an eye on that. But you'll notice here, in terms of those high impact, high volatility, high volume scheduled events, AKA what I call hot zones, we don't have anything really on Monday. All right. We don't have anything really on Monday. The rest of the week is pretty interesting, but Monday is pretty quiet. And that's not unusual for the week after the session after non-farm payroll. So let's enjoy a Fed speaker free, FOMC free. The only thing that we're going to be looking at in terms of hot zones tomorrow will be, and I'm going to head on over to Estimize. And by the way, a lot of folks have been asking, Rug, how do you get Estimize free? Look, there's a paid version and there's a free version. Just use either your LinkedIn, your Twitter, or your StockTwits. I'm still using my StockTwits login because the person who started Estimize, I met them during my StockTwits days. I used to have a show on StockTwits and did a lot of things with StockTwits in the early years. And I met that person. They were starting Estimize at the time. I love this service. It's my favorite service for tracking earnings. So tomorrow we do have some earnings. Not a lot of high impact ones. We've got PayPal tomorrow, Disney on Wednesday. So we're getting, and I think we talked about this in Charts and Coffee on Thursday and Friday, that we're after Apple. We're pretty much done with those really high impact earnings releases, the ones that are high concentration weighted, the ones that can move the indices, move those high concentration weighted sectors. We're pretty much on the tail end. Are there a handful that are going to be still impactful? Disney, I wouldn't even call Disney that impactful. Home Depot, keep an eye on Home Depot, Cisco, Walmart. Right, there's a handful of these that could still be impactful. Nvidia, I would still put near the top. Costco, right? CRM. So there's a few of them, but the bulk of the top 1 to 2 stocks that are in that high concentration weighting of tech, consumer discretionary, financials, the healthcare, that's pretty much in the rearview mirror, those top stocks, and we're sort of winding down earnings. And by the way, with well over at this point, half the S&P having reported, 3/4 are beating earnings. This has been a very strong earnings season, gang. This has been it's earnings season generally this time around is hit it out of the park. No two ways about it. So we do have that coming up tomorrow. So very light on earnings, very light on hot zones. All right, that's what we've got coming up in terms of the schedule. Yes. All right. And so let's jump on back to the charts and let's jump into the question, shall we? All right. First up from PP Family. Good morning from the Far East. Love it. From Asia Pacific. I was 100%. You were 100% right. I was 100% right. Maybe 99%. I was 100% right last week when I said SPX will pull back to 40.60 and slightly below it before it can rally again. I said that. It's funny. We might have talked about resistance, so I don't want anyone thinking I'm predicting. I think SPX, y'all give me too much credit, PP Family. I think we just probably talk support and resistance, right? And that's all I usually, when I'm talking about support and resistance on the S&P, I'm going to take a look at ES. I'll have to rewatch this week in the markets live because, really, I don't remember what I said, to be quite frank, but whatever I would said, you said, how can we learn this from you? It's great. I never have to memorize my analysis because it's always on the charts. It's already there in automated tools, in color, for me just to interpret. And that's how it's easy to stay consistent with analysis, because it's not something I have to remember that I sort of read the tea leaves and thought of something clever. Gang, a lot of analysts are clever. A lot of traders like to be clever. I try not to be that. I want to be consistent in that whatever I see on the chart should still be visible from whatever we spoke about last week. And this week I'll say we're right back to the point of control on the S&P. That level has to be broken in order to head up to about 4,200. 4,200 then is likely going to be overbought, and it's going to be a resistance. Now remember, I'm talking about the S&P futures, which would map then to SPX, which would map to SPY. It would map to the MES micro. If we exhaust at the point of control, which is roughly where Friday closed and now Sunday's opening, the level I would look for a pullback to is going to be roughly about 4,100, which is, cut that range in half. And let's see if we don't get a 50% retracement. If we're going to see something more substantial, I would love to buy the S&P. Take a look here, gang. I would love to buy the S&P into a range around 40.80, perhaps even 40.70, down to 40.40, 40.42. That's going to be a nice oversold cushion of support between some Darvis automated support levels and the 200. So that's the way I would look at that. So everything I'm looking at is just on those automated tools on my screen, and I probably just told you what I saw, right? We trade what we see, not what we think. The levels and lines are there. And if we move from one level higher, it's from one level of support to a level of resistance. If we exhaust at this level of resistance, it could be that next level of support. So it's always a matter of if then, through the charts. The next question up is, what's the outlook for UNG and for natural gas and crude oil? Sure. Let's start with natural gas. And Natty is still, at least Natty, natural gas futures, at least this has stopped the downtrend as of mid to late April. We're in a neutral trend on natural gas futures. That's going to map to UNG, by the way. So anything I see on natural gas futures is ultimately going to map to UNG. And at this point, here's what I'd say. See, we're going back and forth and back and forth. Here's one Darvis level of support sitting at about 1.975. Another one sitting at about 1.950. So really from 1.975 to 1.950, we could probably argue that's a support level at this point. I would never, ever, ever really say that in a downtrend. It's not support that we can even confidently identify in a downtrend. Structure dictates strategy. A downtrend, the downtrend ended April 19. You can see here, it began March 13. And as long as we remain neutral, that could be an oversold buy. But the seasonal bounce that Natty is known for, it's not there, gang. So this is a whole other thing going on in Natty. When Natty is weak, gang, think of it this way. Weakness is what? It's sellers. Why are the sellers here? There's a couple reasons that sellers would continue to dominate, or selling would continue to dominate. So either sellers are in control and they're selling, or buyers are more so in control and they're buying, and that's your mismatch, your trend. Sellers are clearly in control, and all trends are an uneven mismatch of buying versus selling, right? Okay. Sellers are either looking at a lack of demand, so buyers are not around. Remember, whenever you think demand, think buyers. So where's the demand? Where are the buyers? Non-existent. That tells us there's too much supply. There's just way too much supply. Selling is supply. Just that simple. Selling creates resistance, and the supply that's on hand right now for Natty obviously is not being in any way, countered with demand, right? Sometimes you can have a lot of supply, but a lot of demand. We've seen that with the US dollar. Even amongst the printing, there was still a huge demand for dollars. So there's no such thing as too much supply unless it's not being matched or outmatched by demand. Here, too much supply. It's just that simple. So I'd be very, very careful. Crude oil could be a completely different story. OPEC's, and I wrote about crude today in This Week in the Market. So for those of you that want to check it out, I will say, sadly, the unbelievable deal that we were doing has come and went. So for those of you, congratulations, who locked up that crazy deal for the quarter or for the year. Unbelievable deal. That's something I don't know we're going to be doing anytime soon. However, if you go to This Week in the Markets, This Week in the Markets.com, right? This Week in the Markets, plural.com. It'll take you to where you could sign up for a 7-day trial. Okay. And you can join us in This Week in the Markets, 4 issues, 4 videos for the month for $7. I will tell you this, whether my analysis is something that you say really moves the needle on your trading right away or not, that's why we have the trial. But I will tell you this, every single issue is jam-packed with the kind of things that it's taken me decades to learn. Understanding sector rotation, understanding fund flows, understanding the importance of foundational concepts like the 200-period exponential and points of control and volume ledges, and how all those contribute and supplement whatever else in terms of indicators and strategies that you're using. The newsletter is written not with technobabble and jargon. It's meant to be that any level of trader or investor can read it and say, oh, I get it. And then add it to whatever they're doing. It's not going to take away from anything you're doing now. And then as we go into the summer months, I'm going to be bringing in some of the other traders from Simpler, and I'm going to be talking to them about what's going on in the market. We're going to be hopefully doing that really soon. We're only about 5-6 issues into the reboot, so we'll be adding a little bit of that come this summer. So you're definitely going to want to check that out. So I do have a pretty healthy little write-up on crude, and you can check that out. But in the meanwhile, here's what we've got. We've got now what seems to be a pretty significant low, March 20, matched pretty darn closely here on May 4. Some folks might call that a double bottom. That's fine. It's 2 lows with very close proximity to each other in a neutral market. What we want to do now is ask ourselves 2 things. What are expectations for latter half of the year demand? The best type of moves higher, gang, are not taking supply away from the market, which is what OPEC Plus is doing, which is fine. But if that reduction of supply, that production cut, right, that they've been doing, is met with demand, now we've got something that's very bullish. So then we ask ourselves, last year, OPEC cut, I think, by 2 million barrels per day. And then if we go forward to what we're expecting demand to be in 2023, if we have the Federal Reserve start to switch into pause, then dovish mode, look for crude oil demand to increase, coupled with the production cuts, demand, and now this double bottom. Do you see how I'm not just talking about what OPEC's doing? I'm not just talking about, International Energy Agency expectations and global supply. I'm not just talking about OPEC Plus. We're putting all of that together with price and then the underlying structure. And that's where I'm still very bullish on CL. You can play CL through MCL. You can play crude oil through the USO. But let's also remember, we have some really interesting levels in play also in the XLE and Exxon and OIH. So there are a number of places, Schlumberger, there are a number of places that we can look at some energy stocks as well. I'll tell you this. If natural gas is going to slowly, it's still pretty ugly. If natty gas is slowly going to find its way higher, and if crude oil prices can find their way higher, the one ETF that allows you to take advantage both of the natural gas company stocks and the crude oil company stocks would be the XOP, I would look, and you know what? My newsletter's almost done. Maybe I'll have to put this off to next week, but I might take a quick peek in the newsletter this week at oil, and I'm typing this into the newsletter right now. Gas Explorers. How many of you are current subscribers? Just out of curiosity, the video that comes with the newsletter, right? So it's not just the newsletter you get once a week on Monday morning. You get a video from me on Friday afternoon to watch over the weekend, and then Monday morning I get you the newsletter. And the newsletter is an easy read, like I said, jargon free and everything. But it's a good, depending on how deep I want to go into some of these topics, it's going to be anywhere from a good 10 to 12 pages that you can refer to throughout the week in terms of lines, levels, and what's in focus. I might put oil and gas explorers. I'm just typing that in right now. I might take a look at that because there's a lot of ifs in place, but it might be worth watching if crude goes higher and natty gas. All right. Anyway, see, that's what happens. I start going down the rabbit hole. That's one of the fun things about putting the newsletter together. I get to go down all these rabbit holes of, it's almost like treasure hunting. Where is attention going to be and why? And can I see that proof in price? And if any one of you do research on the weekends, you know exactly what I mean, right? It's a lot of fun. All right. I'm new to this week in the market. Can I look at 6E? Sure. 6E is that way in which we look at the US dollar. Remember, the 6E is 58% of the US dollar basket. So if you're looking at UUP, DX futures, DXY, this is a dollar basket. It's never just the US dollar. It's a US dollar versus, right? And so when I look at the euro, remember, Christine Lagarde and company are still very hawkish. We were alluding to before how the ECB was in discussion for maybe a 50 basis point hike as opposed to the 25 basis point or quarter point hike that they did have last week. This is a very hawkish central bank that's still very much in inflation fighting mode. That's going to keep the euro strong. And based on the dollar basket weighting, if euro goes higher, dollar must go lower. That's the relationship, right? It's an inverse correlation. It's a negative correlation. So euro is definitely very much by the dip. Let's see. You know what? Let me take a look at what I have here. I covered in currencies, by the way, euro. I covered the Aussie today, as well as the yen. I talk about risk appetite and some of the current Bank of Japan monetary things we'll need to keep an eye on. There's a new head of the Bank of Japan. So we have some interesting things going on in the BOJ. But yeah, very much a fan of the buy the dip, Howard. And then in the newsletter, I give you the levels that I'm looking at. All right, next up, JJ, Uber, sure. Do I see a pullback in Uber in the next days? Do I see pullback in Uber? So it's less about when we could see it, Damien, and more about all those if then. So this is the way I would look at it. Uber had a very powerful reaction to earnings. In fact, it was already gapping up in front of earnings. Maybe somebody knew something, right? So now I take a look at the high. So if we stay in this range, right? If we make new highs, then this retracement is going to have to be recalculated. But if we pull back, actually, I'll tell you, even with the Pingala at 50% aside, 36.20, and then this would be another layer around the gap, but 34.30. Those two levels could be interesting levels where volume has been very active. That is a volume profile, volume ledge. You'll notice those two levels, the volume profile histogram is jutting out. That tells me there's more volume at those two levels in this space of action than other levels. That's a volume ledge. Price can hang on to it quite literally like a ledge. So I don't know if Uber is going to pull back in the next few days, right? That's creeping away from analysis and into prediction. I'll let all the geniuses on television do that. But if I'm just looking at if we pull back, and by the way, why might we pull back? Well, there is a volume ledge here at 37.75. So if Uber is unable to take out that sizable volume ledge just overhead at 37.75, I would look for that 36.20 or that 34.30 level that I talked about. So that's the way I look at it. If it cannot go any higher, here's why we might expect the resistance. These are the two volume ledges that I would expect to give buyers something, some traction, something to hang on to, and therefore be support, right? So that's the way I would break down Uber. I hope that makes sense. All right, next up is, let's see here. What's the best way to be long the euro without using futures? Oh, with or without using futures. Sure, Wade. What's the best way for futures? Look, there's three. There's 5 ways. Let me explain. The most direct way is euro versus US. Euro-US foreign exchange is the largest market of any kind in the world. Or alternatively put, it's the largest market in the largest market, the euro versus US dollar. That's Forex. Not everyone trades Forex. Second would be the 6E futures. There's also a micro euro. So there's the micro euro and the euro contract on the futures side. So we've gone from Forex to futures. On the futures, there's options on those futures contracts. All right. Then we can go to the FXE Euro ETF. That would be now kind of the stock of the euro. It's an ETF. If euro is moving higher, that means dollar is moving lower. So DX futures, DXY, UUP are all alternatives as well. So as much as I would look to get long all those euro, choose my own adventure, all those euro variations, I could get short or long puts in all those dollar alternatives. And that's the way that I've done it for years. That's the way I've done it for years. And ultimately, the way that we could, right? The way that we could think about how to play, it'd be nice if I actually go on the euro chart while we're talking about this, right? The way that we could think about this really isn't about necessarily what's best. Think about what you're comfortable trading, right? Think about liquidity. Nothing will be more liquid than the Forex. Futures are really quite liquid. The 6E, you can look at the micro. The options on the 6E are pretty liquid, and the FXE can be a little spotty. Sometimes UUP has better liquidity, but if you're looking to get long calls or long the euro, please keep in mind it's short the dollar or short those the dollar ETF. So short the dollar ETF, short the dollar futures, DXY short, or you get long puts on the UUP options, right? So those are all things that you can do. All choices, Wade. All right. Next up is our thoughts on. So stick with some currencies here, Sean. Yeah, sure. So thoughts on the pound versus yen heading into the week. It's in an uptrend. So, Sean, it's pretty easy, right? It's pretty easy. But I've got an uptrend on the pound yen. And this doesn't matter if it's a Forex contract, futures contract, whatever, stock. Uptrend means buy the dip. So then my next job is to figure out what a dip is. It's a little soon. Let me see here. I don't keep an eye on the central bank, the Bank of England, as much as I used to. But I do believe I have it in the, let's see, yeah, Thursday. So Bank of England monetary policy report is at 7. Then we have the Bank of E Governor Bailey speaking at 7:30. That's on Thursday. So the only way to really do that, Sean, is figure out where we are Wednesday. And then on Thursday, with that weakness, since it's happening in the morning, 6B might be a really good choice for that because it will be open that time of morning, as will, of course, pound yen and pound US, right? So those of you that don't have access to the pound yen on Forex, you might say, well, how would I do that, Rog? 6B would be a choice to do that. So whether you're looking at pound yen or 6B, Wednesday, Sean, Wednesday, where are we? And then where would the support be if whatever the Bank of England monetary policy report holds or whatever Governor Bailey says, if that creates a little bit of weakness? Think about what Lagarde did to the euro. That was the gift for a lot of traders who are waiting for weakness in order to, take advantage of the movement back to the upside, I would look at that in the same way. So the timing's really got to be, where are we Wednesday, or even immediately in front of Thursday's event, and then identify that zone and then go from there. That's the way I would look at that. All right, gang. Have a great one. Thanks as always for being here for this week in the market. Thank you for the symbols and so forth. And let's see. Larry, I used a visible range volume profile in TradingView. Yeah. So if you look at the visible range volume profile, I changed some colors around, but the settings of it are simply really the visible range, right? So whatever data is on your screen. So I use a visible range volume profile on TradingView. All right, gang. Have a great one. I'll see you tomorrow for Charts and Coffee. Yeah. We'll pick up the conversation then. All right. Back to the can of rain. All right, gang. Be good to each other. Enjoy the rest of your evening.